What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 20th of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I not only want to do a jam-packed episode where we cover the current performance of Bitcoin and altcoins, with altcoins, especially in the small and mid-cap range, continuing to lead out in the market, but speaking about these high-performing plays and maximizing potential returns, I want to talk today about how you can find the next 10, 20, 30, 40, 50x plays, whether that be in altcoins, whether it be in stocks, practically anywhere in financial markets. A lot of people are going down the same beaten path of investing in the plays that did well over the last decade or in the past. And it tends to be that in markets that prior market leaders eventually become market losers. We need to find which plays are going to win out in the long term. And I think there's something big going on here, both in crypto and in equities. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking a little bit about the performance of Bitcoin. Price is all looking good here. We're holding on that 21 day. The key point here, as we've echoed, guys, is dependent on whether or not we break and have a significant close below the 21 day, which we've not been able to do here since back in October. So the bulls are holding the trend here so far. And so long as that holds and we get above 44K, this has got a good chance to come up to 48 to 52K for a final top going into the ETF announcement. But beyond Bitcoin, as we've echoed here in this channel, Bitcoin, if you got the absolute low and you've been riding it out here, it's made some good returns, but there are plentiful amounts of altcoins that within a week will outpace those returns, if not more, in just a matter of a few trading days. And we can see that Total 3 has been gaining significant traction here, showing much more hesitancy to retest that 21 day and holding up strong here, very similar to what we saw back in mid-November. This is the kind of trend here that I want to see in the market, guys, and it showcases here why your focus should be not on Bitcoin, not on Ethereum, but on the small and mid caps here. We want to find value plays that are much smaller and have the ability to engage in markets of scale, right? The ability to easily double, triple, quadruple, 5, 10x from where they are now relatively easily, and in a degree where the markets can actually justify those valuations due to their narratives and the trends underneath. We can see here that the one of the two plays we've really been talking about a lot here in this channel. We have some other ones we're watching in the Dash report as well, but the big ones I've been showcasing with you guys here around our biggest theme, which is Bitcoin related infrastructure, right? If you're looking for any kind of fundamental narrative, anything related to developing around Bitcoin is the narrative here because of the ETF. So because of that, we can see that the second best performer here over the last 24 hours is Stacks or STX. This has been a play we've talked about time and time again on the channel that has the setup here at a $2 billion market cap to easily double from this point to 4 billion, 5 billion, could go on potentially to 10 billion if the mania really gets strong going into January and altcoins continue to pick up. And if you take a look over the last 7 days, it's not only up 57%, but across the top 100 plays, it's the 7th best performer here. My main point about this is that if you scroll down the list, you'll find that many altcoins out there over the last 7 days are practically break even or at a loss. The reason it's so significant to focus on the right market leaders is because if you don't, during those periods of euphoria and optimism, you may very well be missing out on the real returns, those that are actually gaining market traction, who are taking share of the altcoin market and making accelerated returns. If you aren't, you could very well be buying a deadweight position and taking on a lot of risk so that when things start to go down, you end up just actually losing money. So we want to make sure here that we're in the plays that are strong. We don't want to hesitate at paying a premium. That even goes as well for some of the other narratives like meme coins that we talked about. But beyond meme coins here, if you are going to be investing in altcoins, guys, we need to find plays that are strong, that own their own markets, and are relatively on the smaller side of things here because they benefit from that market of scale. And if you can find strong fundamental plays that are new to the market, that are proving themselves with real traction, and have a small mid-cap valuation range, you're going to likely have a chance at winning out on some big plays. That's why I want to spend a little bit of time to talk about our partner and sponsor here in the channel, and and that's Oval 3. Now, for those of you who are hearing about Oval 3 for the first time, we did a review about them back a couple of videos ago, which I highly recommend you guys check out at the link down below at the description. But to give you a very quick pitch on what they're doing, Oval 3 is aiming to build the premier Web3 fantasy sports platform for rugby. And while this might sound like a very specific niche, this is a massive market opportunity that really hasn't been addressed in crypto. There's been a lot of fantasy sports platforms around football, international football, but in this case, we haven't seen a lot around rugby, which has hundreds of millions of players. So I think for me, I'm very excited at any kind of smaller mid-cap size project that's relatively new to the market and is tapping into one of these markets and seeing significant traction. In just 7 months, they've had over 500,000 sales when it comes to their player NFTs that you can utilize to build your fantasy teams. And this isn't just a project that came out of nowhere. This was built by BAMG Sport, which is the creators of Fantasy Rugby World, one of the biggest fantasy sports platforms for rugby. And now Oval 3 already has over 10,000 players within the community. So this is really exciting to see, especially when you consider that they signed on with the French and American National Rugby League as being the premier Web3 platform for fantasy sports. So this is going to give them a lot of brand promotion, get them out there towards a lot of people. And outside of that as well, outside of all the traction they've seen, in this case, Oval 3's native token, OVL3, is the native utility token that comes with a lot of utility purposes, such as purchasing the NFTs within the game and so much more. If you guys want to learn about some of those utilities around the project, I recommend you guys check out the review. We deep dived into some of the talking points around what Oval 3 is building, and along with that as well, how the Oval 3 token is related to the ecosystem and some of its utilities. But they just recently launched on BitKit and Uniswap, so if you guys want to check it out, I'll leave it down below in the description. And also as well, if you want to check out the launchpad that they launched the token on, we also have the link to DAO Maker down below in the description. But again, I want you guys to do your own due diligence. I just basically am really excited about the project that they've built here, because I think at the end of the day, Oval 3 is one of the only platforms tackling this. And as I mentioned, we're focused on small and mid caps here. If we're focused on the altcoin space here, we've got to make sure we find some plays that are building things that people are excited about, and where the token itself will actually benefit if the platform itself sees continued traction and growth. So when there's that alignment, that gets me really excited. But again, do your own due diligence, guys. Check out the links down below in the description, and stay tuned as we'll likely have an interview with the CEO or another prominent team member either on Thursday or sometime this weekend. But let's go ahead and dive back in here to the conversation, guys. I want to go ahead and talk a little bit here about this topic of sector rotation, because we talked a lot today about some of the market leaders, right? Bitcoin related infrastructure, meme coins. Those are the leaders here in this cycle, whether we like it or not. Those are the focal points. And by choosing to ignore these trends and rather focus on legacy plays that might have done good in the past or be fundamental plays that we like, you may end up losing big time in the market. Great example of this is taking a look at Ethereum. We have for the past year told people that Ethereum is likely not the strong narrative, even with EIP 1559 burning some of the supply and proof of stake lowering the inflation rate. These elements alone of supply restriction don't make an asset go up. And it's proof of that when you take a look at the performance of Ethereum versus Bitcoin here. Now, yes, Ethereum is up in dollar terms. Everything is up in dollar terms in crypto. But you've been outpaced by Bitcoin if you've been buying Ethereum here since back in August of 2020. And now it's very clearly looking like Ethereum is no longer going to be able to hold its long-term line of support on its relative lows. We are seeing rejection at the 200 week. As we've told people constantly on this channel, don't chase losers in the market, chase winners. Chase those that are constantly setting higher lows and higher highs, that are maintaining an uptrend. Don't fight the market, follow the trend here. Along with that as well, we can see other EVM compatible chains like Ethereum, such as BNB for Binance Smart Chain, against BTC breaking a multi-year trend line since 2017. A 6-year trend line has now been snapped here on one of the biggest altcoins in the market behind Ethereum. Outside of that as well, you've got other plays here. Matic showing no love here over the past few months since back in October versus BTC. Arbitrum continuously bleeding and losing out here. This was all the rage back in early 2023 and in 2022. Now these new layer 2s on top of Ethereum are just again distributing month by month here against Bitcoin, as well as Optimism just not seeing any significant bid, can't get above the 200 day even on one of these up moves. These are some painful things to realize in the market, but it's something you need to realize, because if you're positioned in these plays and they don't start outpacing Bitcoin, well, you can't complain if markets are not giving you the kind of returns you're expecting. You need to go along with what the market and price is telling you. You have to follow the trend here and follow which market leaders are building returns that within a week, 2 weeks, are outpacing what Bitcoin's done over this past year. If you aren't finding those plays in the market and you aren't considering them in your portfolio, you'll likely continue to lose out. It doesn't mean you need to go out all in into one meme coin. I'm just saying here that if you're trying to trade plays in the market, you need to make sure you're trading plays with strength, ones that are showing strength against that 21-day moving average, not facing resistance at the 200-day. Now, one big thing I wanted to talk about here is going into how this plays out in a much bigger way in equities, right? This is crypto, where things are moving very quickly, and we're talking about a change in sentiment against the EVM compatible chains, the repetitive kind of we do what Ethereum does, but we're going to scale a little bit better argument as to why these plays have value. That is starting to wane out as Bitcoin is the narrative and as meme coins take off. But that's just in the crypto sector. There is also something very big going on in equities, in my opinion, guys, and it's something that we need to be made aware of. But also, along with that as well, whether or not markets continue to rally or go down, I think this change is here to stay. And it's a positive sign here that essentially we have the green light to start looking for new market leaders in equities. And this is a big thing we've talked about in this channel, guys, essentially that a lot of those 5, 10, 20, 30, 40, 50x opportunities, I know it sounds crazy, but over a 5, 10-year period, those plays can happen in equities. Those plays are setting themselves up right now. And I can tell you right now, it is not going to be Apple, it's not going to be Microsoft, it's not going to be the FANG stocks, it's not going to be the time-tested plays that did really well over the last decade during their waves of innovation, growth, and continued accelerated adoption. Those plays are no longer growing like they used to. They are already multi-hundred billion dollar, if not trillion dollar companies. And for them to 2, 3, or 4, or 5x over the next few years is going to be incredibly difficult because they're not seeing massive growth in their earnings. People are already paying a massive price to earnings multiple for these plays. And outside of that, companies just eventually reach their maximum point of growth. And that's okay. It's not to say that they're bad companies. They just might not be the best investments. Even if they continue to go up, there are going to be plays that far outpace them. Now, one thing I'm watching here is as VTI is coming up here, this is the Vanguard Total Stock Market ETF. Here on the monthly chart, we're coming in here to the resistance band here on the Lux Algo indicator. I would advise you guys to keep an eye on this indicator suite and continue to watch whether or not we can clear through this potential resistance range here. We've seen back here, we got shot down on the lower part of the band back in July. There's a reason that people are watching these indicators here. They play a significant role here in tracking price. And we're going to see whether or not we can actually get through here and have a flip on the trend. Because as you can see, when we get those green flips, they usually maintain for some time on the long-term time frame. So that for me is a really big thing to watch. But going beyond that, again, if you guys want to check out Lux Algo, I definitely recommend you guys check it out. You guys can use it for crypto markets. You can use it for equities. You guys can get over 60% off at the link down below in the description. Whether you want to try a monthly package, quarterly, or annual. It's a really great indicator suite, one of the few that I like using here on this channel and in my own analysis personally. But beyond that, if you guys want to check that out, you can check it at the link down below in the description. The main thing I want to talk about here is where the big performers have been in equities over these past few weeks. It's not just been the altcoins that have been doing well in crypto markets, right? We can see here that Total 3 has been outpacing, right back since June of 2023, it's been outpacing our EXBS index, those 4 large cap players. We can see that Total 3 is showing the resilience, barely coming down to touch that 21-day. But this is also coming in equity markets as well. I think we are on the cusp of having the next major wave of opportunities here in equities, guys. And that's not to say that like equity values can't go down over the next year or be relatively stagnant like as we go into a recession. I'm not talking about like the short-term moves here. I'm talking about finding the next Apple, the next Microsoft, the next FANG stocks, Netflix, Amazon, Google, Meta, you name it. I'm thinking about how are we going to find these next big plays in the market, because I think in the Russell 2000, which is made up of 2,000 small cap companies, right now within that basket, there are plays out there, and also other broader small and mid cap stocks that aren't in the index, that are going to bring about sizable life-changing returns over the next decade or so. And there are a lot of different sectors that make up those potential players. But the main thing I wanted to showcase here today is the seismic shift that is going on in equities right now. This month in December sent a clear message. After topping out in November at its highest level since back in 2001, in over 22 years, we saw in the S&P 500 to the Russell 2000 ratio that the largest 500 stocks hit their highest valuation point versus the Russell 2000 performance since back in 2001. And what happened there? We not only retested the same range that we faced resistance in 2001, as well as back here in 1990, but we saw the biggest downward shift likely since as far back here, from this similar range here, since back in 1991, 30 plus years here. What does this mean? Why am I going on about this, right? This might just be pure coincidence in some people's eyes, but more importantly, people might be wondering, why does it matter really in this case, right? Shouldn't I just go out and buy the FANG stocks and do what's worked over the last decade? I'm arguing here today, no. And I think that there is a big amount of significance in this chart once you understand what it is saying here. I think it is very clearly showing, like it did here in March of 2020, like it is here in November, and also here back in the 90s, and here back during the collapse of the dot-com bubble, that the excessive concentration in the 500 largest stocks is over. And now markets, like they were back in the early 90s, are starting to rotate towards some very small mid-cap risk-on stocks. Stocks that are entirely new sectors that we have yet to really see materialize, that are high risk right now, but if 10-20% of them succeed, they will go on to be transformative players, potentially even as big as the FANG stocks, Microsoft, or Apple. That's the key focus point I want to talk about here, guys. I'm not trying to be melodramatic or oversell it. I think what we're seeing here with this huge acceleration in the small cap plays, this 23% move we've seen, nearly 24%, over just since back here in October. In less than 2 months, we've seen this acceleration here in these small cap plays, far outpacing the performance of the S&P 500. It is signaling here that over the next few years, you are going to want to focus on the small and mid caps. They are likely going to outperform. And when you consider that the S&P 500 underperformed the Russell 2000 by 33%, that is a magnitude of difference. So if markets are moving higher here, it's likely that the small mid caps are going to be outpacing versus the S&P 500, versus Apple, Microsoft, all the names that you could probably recognize. And when things are bleeding, the small caps are going to hold up. They're going to hold stronger in their 21-day or 50-day moving averages, while a lot of the big tech stocks might be coming down to their 100 or 200-day moving averages, facing bigger corrections in price. The reason I say this here, and you can even see it in the NASDAQ more clearly, we are at dot-com levels of overextension in the large tech plays. While they may be much more fundamentally sound financially than where they were in 2000, the premium we are paying for these names is not that far off. The point I want to make here today is that overall we need to start looking for new sectors of growth, new opportunities, small and mid-cap stocks that can go on to become titans, potentially $100 billion, if not trillion-dollar companies in their own right. And I think that there are a ton of opportunities on the horizon here going into 2030 that are going to be those leading plays. We talk about them a lot within our newsletter here on the channel, the Dash Report. This is a great area where you guys can not only get my analysis on crypto markets, but we also cover these sectors that just, unfortunately, I don't think are going to be in the crypto sector. Maybe there will be some tokens around them, but sometimes you've got to explore outside of your comfort zone. You've got to explore some of these different markets. And to me, it's exciting. I'm familiar with equities. I've traded in all 4 major markets: crypto, stocks, commodities, and Forex. And a lot of the opportunities out there, out of all the markets, guys, are going to be in equities. There's just thousands upon thousands of stocks and companies that have an opportunity, who are currently bleeding through cash, innovating, taking on risk, who are eventually going to go on to develop some of the greatest technological innovations of our lifetime. And I want to be a part of those things. I think that's where you can get some serious multiple growth opportunity. Some companies right now that we're watching are just a couple $100 million in market cap that could easily go on to be multi-$10 billion companies just here in the next few years. So I don't want to oversell it. I can't make any fixed promises to you guys, but we are watching some of those sectors that we think have the potential to do that. And when you sign up for the Dash Report, the link down below in the description, you guys will get access towards a 20-page monthly newsletter where we cover all these markets, the opportunities that we're watching for. And outside of that as well, you get access towards our long-term portfolio watch list. You guys will get access to monthly trade setups, our exclusive market updates that we only send out in the Dash Report alerts group, our alerts group messages for trade setups. You also get access to the Dash Report discussion group and our mid-month webinars where I go out and I answer your questions, give you guys a brief market update. We dive into the charts and look over some plays that you guys are watching. There's a huge offering here, and as we're coming here to the close of the year, guys, there's roughly about 10 more days as we're going towards the close of the year, give or take, and we're going to be raising prices sometime in early 2023. So if you guys want to go ahead and lock in and grandfather this rate, it's only $240 a year, less than a fraction of a cup of coffee a day. In that case, it's a great way to support the channel. It's a great way to get access towards all this content, as well as the key momentum indicator we've talked about in the channel, the blue red line that many of you have seen me cover here in the channel before. We share that exclusively with the Dash Report member now. There's all kinds of different stuff that you guys get access to. But again, even if you're just looking to support me, I think it's a great way to support the channel, but you guys get so much more additional content on top of it. But we've been doing this over the last 5 years. Our community has grown up to hundreds of members, coming up on nearly 1,000 members in the Dash Report. So you guys really get the cream of the crop, our best community members in the Dash Report discussion group that you can chat with and learn from. Everyone's been sharing opportunities that they're watching in the altcoin market. It's not just me coming out there and telling you guys what to do. It's a community, and I love that about what we've built there with the Dash Report. So if you guys want to check it out, I don't mean to push too much, but just want to let you guys know as we're coming up towards the close, I only have a few more videos where I can make that announcement for you guys. But anyways, that's it for today's video, everyone. Thank you all so much for letting me ramble on today. I hope this proved valuable for you guys. And the big thing above all is I'd ask, if you enjoyed this video, consider dropping a like. Thanks so much, everyone, for tuning in. I will see you guys on Friday at 6 a.m. Eastern Standard Time for the next update. Stay tuned, trade safe, stay smart, and I'll see you all in the next video. Take care, everyone.